Let's get to Apple. Apple had an earnings beat here. So 81.8 billion versus 81.55 billion. Then you also had 1.26 earnings per share versus 1.2 earnings per share. So it's a big beat in the sense that it beat both top and bottom line, but it's not something that you'll necessarily write home to mom about. Apple, I didn't even think the estimates were going to be that hard for it to beat because they were pretty generous. But after hours, what do we have here? We have this rising trend line for Apple. And this one goes all the way back to January. This is probably the best rising trend line in all of stocks right now. And it got broken yesterday for the first time all year long. So then you go into the regular trading session today, you finish about 0.73% down, can't reclaim that 20-day moving average. That 20-day moving average, this green line right here, has also been a really good support level for the stock for a long time. You can see where it held it back in July. And you can go back here to May where it held there. It bounced off of that level, bounced off of it back at earlier that same month. It has been a consistent level for the stock to be able to bounce off of, as well as with this purple rising trend line that goes all the way back to the January lows. But like I said, yesterday it breaks below it. It closes just below the 20-day moving average yesterday, and now we're getting a little bit of follow through. Now, with its earnings being out, you would think, hey, maybe the stock should rally. Not so much, because now it's down to 1.5%, so it's about doubled its losses from today. And we're looking at much more of a significant retest of this 50-day moving average, something that hasn't happened again since January of this year. So some pretty significant developments happening for Apple. If this stock continues to pull back and we start seeing a much bigger wholesale sell-off, and this is probably the biggest sell-off since February that we've seen in Apple, it's going to have a dramatic impact on the overall market. I would say a significant one, particularly with the NASDAQ 100. If you get the Apple to pull back, it's going to pull back on a lot of other stocks too. And then as a result, it could create a nasty snowball effect for the overall market, S&P 500 as well. Where would be probably the best protection if that happens? If you have to be long, probably in small caps, because they don't have the exposure to Apple like what the NASDAQ 100 and the S&P 500 has. If this sell-off continues, where I want to start looking at for a potential bounce opportunity, and this is not in the today, tomorrow, next week per se, unless you get a significant market correction, you're looking at 169, 170. That would be where I'd want to load up at on some shares to try to play that bounce. That is an old support level that has been very significant in years past. It tested it one time and then it broke right through it on a gap higher. That was probably from the previous earnings report. But if that stock does pull back, 169, 170 would be my place to want to see whether or not it can hold that support level. In the meantime, what is some other support levels to be watching for? There's very little support levels outside of the rising trend line. That's what makes this stock a little bit on the difficult and scary side, is that there's not a lot of huge key support levels because it's trading at all-time highs and it's been doing so with very little pullback. So a pullback maybe, like I said, to this 50-day moving average, 187, there's a little bit of support there. But outside of that, there's not much else underneath it. So there's some vulnerability with Apple here. There's big vulnerability. Now we may see, because if you remember back on Tuesday, Starbucks reported earnings and it was selling off afterwards. And then yesterday, once the market opened, it was soaring. It was like one of the only stocks that was going up yesterday in the S&P 500. It did an incredible job. Actually broke out for a little bit, got a little bit of follow through today, despite the fact it was a difficult tape today as well. Strong volume, but the initial reaction was to sell the stock off. The exact opposite of AMD. The initial reaction on AMD was to rally it, and then it sold off during regular trading hours. So just because you're seeing Apple right now selling off doesn't mean that people won't get emboldened and want to buy the dip on this thing because they're thinking that 189 is somehow a generational buy-in opportunity like they've been doing with a lot of the big tech stocks of late. Also, if Apple does start to sell off, watch what its effect might be on Amazon as well. You could see it start to play out on Amazon. Maybe people start taking some profits there because after seeing the Apple report not get fully embraced by Wall Street, that could actually have a little bit of a chilling effect on Amazon stock as well.